I'm Alan Hughes. I'm the managing editor for TiiCKER. And for our very first Vodcast, we have the boss, the big man, the head chief, the head honcho, Jeff Lambert. Welcome, Jeff.
Hey, thanks, Alan. Appreciate you having me on, and love that this is our first one that I get to show up on.
Well, this is a dry run, so you're more of a guinea pig than a guest, but
fair. Fair.
Call it what it is. So let's first, for the folks that may not be familiar with TiiCKER, what is it?
Yeah, so TiiCKER with two I's stands for individual investor. TiiCKER is a platform both on the web and an iOS app that connects public companies to their individual investors and converts consumers to shareholders through perks. And again, you come to TiiCKER, you read the great content, you discover stocks that you own that offer perks, or you discover a brand that you love is a public company, and you can buy through free trading stock on our site as well.
Cool. So tell me about the origins of the company. You have the other firm, and then you came up with this idea. Just walk me through the genesis.
Yeah, so have been doing investor relations for 25 years, and all along the way, it's always been a challenge to connect measurably to individual investors. We call them retail investors. So your stock brokerage account that you have with an online broker or traditional brokerage firm. We're not talking about 401ks or mutual funds. These are simply self-directed or brokerage accounts. It's always been hard to connect to them as we represent public companies because of what's called street name. You own the stock, but you're invisible to the public company. And so we have been trying for years to reach these individual investors, and we've always known that they're brand loyal, they're long-term investors, they vote with management in a proxy, in proxies, and so they're very valuable. But it's been really hard to get to them. And so after being frustrated for decades, we decided we'll just create a platform ourselves.
So tell me a little bit about the platform. What are the objectives? Is it more focused on the consumer, or is it more focused on the corporate side?
Yeah, it's really, there's kind of two sides of the house. A public company would want to be part of TiiCKER to reach those individual investors and to market to them, to bring their existing investors to the site, to link their accounts, and to convert perks. There are numerous, actually, 80% of individual investors want to buy brands that they know. 77% would buy a public company if it offered a perk. And so we want to capitalize on that for the company, the public company that has hundreds of thousands, in some cases millions of individual investors. And so bringing them to the site on the corporate side, the flip side of that is the individual consumer shareholder, and that shareholder owns stocks in their portfolio, and they oftentimes own brands that they know, brands that they shop, brands that they wear, and so it's converting that shareholder into a consumer if they're not already. And that's what TiiCKER can do, is bring that consumer to TiiCKER, and they discover brands that they love, our public companies. They connect their accounts that they currently own and discover rewards and perks and discounts. And so it really is a virtuous cycle between the public company and the consumer, and really benefiting all on the TiiCKER platform.
Yeah, now you mentioned some stats, and we'll get into the Harris poll later. But what are some of the more interesting perks that are available, that are out there for shareholders?
I think some traditional perks that have been around for a long time. You can save $100 to $300 on your next cruise that you go on if you're a Carnival Cruises or Royal Caribbean shareholder. You can get a friends and neighbors discount, save thousands of dollars on your new Ford vehicle if you're a Ford shareholder of at least 100 shares and you've been owners for 6 months. And these are not widely known because it's really been difficult for that public company to verify their owners, and that's what we can do on the TiiCKER platform. So those are a couple of examples. Although I would say my favorite is the newest entrant into the TiiCKER fold, which is a shareholder perk from XFC, Extreme Fighting Championships. And they're doing swag, so hats and shirts, and also codes for their next pay-per-view fight and VIP access, and the types of things that shareholders really want and demand, but they've just not been available because of this street name or shareholder verification issue. So XFC is a great example of very rabid, very loyal fans, and discovering that they're actually a publicly traded company. I can own a piece of the XFC and be part of its growth. And so I think that's really this connection of shareholders who are very loyal to the brand and rewarding them for that loyalty.
Now, I understand TiiCKER had a presence at the last XFC contest. Tell me a little bit about that. What was that night like? Because I wasn't invited for some reason.
Right.
Yeah,
right.
as CEO, of course, you get to go.
You're still bitter, obviously, but there's going to be a lot more opportunities. And I thought you were saving up for the holding out for the Carnival Cruise, but
that's on the table.
I think XFC was really exciting for a couple of reasons. One, it was their recoming out party. They've been around for several decades, but this is their first fight in 4 years. And so they've been working toward building the platform again. They did tryouts. They had 1 million people watch tryouts for this next generation of XFC, and being there and in person, again, socially distanced, and all the fighters and staff and everyone had been COVID tested and negative, doing all the safety precautions, but the excitement of a televised on NBC Sports in 60 countries simulcast. It was a major sporting event pulled off during this time, which was really exciting. But a surprise to me and many of the fighters there, they are actually doing a unique compensation system for their fighters, and you get paid like a normal league as a fighter, but then you also get shares of stock. So it's almost an employee stock purchase or employee stock ownership plan, but for an athlete. And there's no league or team in the world that does that, and it's really exciting. There's only a handful of publicly traded sports teams or leagues, and so you start with that premise, and then to actually compensate the fighters, they were talking about it as a win bonus like none other. And so I think, again, a platform like TiiCKER allows for that facilitation of, okay, now you're a shareholder. Why don't you discover what other brands you might like, an Adidas or a Nike or Under Armour, these other apparel companies or sporting goods companies that are public. This is the cycle that TiiCKER creates in awareness and being rewarded for, again, the perks of ownership.
Yeah, and I love that idea where the athletes actually have skin in the game. That's huge, and like you said, it's unprecedented. I don't know of anybody else doing that.
Yeah, and it's interesting. We're going to be working with the XFC to do some, kind of finance and personal finance 101 training with a lot of the athletes. Like many sports, they come into wealth, they come into success, and don't really know a lot about how to manage their money. They have an entourage around them looking to advise them, but not always from a skill or a background in finance. And so it's important that they are wise with their money, and there's no better long-term opportunity than investing. And so the other benefit is you're essentially creating a bit of a retirement fund for these athletes, and again, truly unique across any platform. And so we're really excited to take this partnership, and that's what TiiCKER can do, because we're working with consumer shareholders and public companies. We can do education, we can help people discover brands and discover public companies, and that's why the content on TiiCKER is so important. We do thematic, USA Today like type pieces, and Al, you're a great discoverer of those fun stories, like the Thanksgiving story this week, and upcoming holiday stories. But it's always amazing to me how many public companies are out there that may be brands themselves or simply a house of brands. A couple of good examples You might wear Merrill footwear or Cat or Sebago. These brands are well known, but many people don't know that they're owned by a publicly traded company called Wolverine Worldwide, ticker WWW, one of the best tickers out there. WWW is a portfolio of brands, and so if you're a fan of that product, you can get a shareholder discount on any of their products across their whole platform. And another great house of brands, the largest RV manufacturer, owns brands like Jayco and Airstream, which certainly consumers know, but do they know that they're a publicly traded company called Thor? And Thor Industries, THO, is a publicly traded company that is not a brand itself, but has a portfolio of brands. And so that's one of the fun things about TiiCKER is it really is a surprise and delight discovery mechanism to connect those brand loyalists with public companies.
Yeah, it's funny because I wasn't that familiar with Thor Industries until I was researching an article on road trips. You have more people doing road trips as a result of COVID, not wanting to fly. And Thor was one of the companies that benefited as a result of that trend. RV sales apparently had skyrocketed. And I had no idea until researching that article. So I thought that was very interesting.
Yeah, you'd be like a lot of individual investors. You're going to know a lot of brands and you're going to shop a lot of brands, but you maybe don't always connect that to the public company.
Right. And so this leads me to my next question: is what is the biggest challenge on your end as TiiCKER CEO with regards to, is it the lack of knowledge of these stock perks? Is there not enough of the stock perks out there? Or is it a consumer awareness thing? What is it? Or none of the above?
I think it's there's because of the inability in the past to verify ownership easily, these public companies only know about 10% of their individual investors. And so if you can't offer a discount or a perk to a shareholder that you can't verify if they're actually a shareholder. And so that was a really important impediment that we had to overcome to connect that. And now that we can, we're seeing, again, as I mentioned, XFC and others that are coming on, they're adding back, or they're returning shareholder perks to, again, a rewards program. Loyalty programs are a multi-billion, $100 billion opportunity in just the U.S. Airlines, hotels. You think about the car rentals, all these different loyalty programs. Consumers love them, and yet there's not one for owners. This is the ultimate owners group, right? And so I think that's where that's what TiiCKER can do, is create owner groups around public companies and their brands.
Yeah, one of the stock perks that I really love is Willamette Valley. You're very familiar with them. Tell me a little bit about their program for those that may not be familiar.
Yeah, so specifically about Willamette Valley. Yeah. So that was one of our very first clients, and in looking at Willamette Valley, they've had a shareholder perk for a lot of years, and that perk was a discount on their wine products, unique VIP tours and access to their tasting room, and multiple tasting rooms in different states. They're based out in Oregon, but they also did direct stock offering, which is very rare, but essentially using that individual investor audience to raise capital, to build a new tasting room, or to expand their product line. And so it's the perfect fit of wine lovers and wine enthusiasts can own a piece of the wine that they drink, get a discount, and be rewarded for that loyalty. And they have, again, tens of thousands of individual investors who now are part of that perk and rewards program. And that's, again, just one example. And there are, again, thousands of companies like that that I think as they become more aware of this, you asked earlier, the awareness. It's absolutely an awareness of that such a thing as TiiCKER exists. We're the first that you can actually verify ownership. Consumers can buy stock for free if they are not they don't currently have an online investing account. and they can connect and be connected with those companies. And so there really is a lot of different wins here in the platform.
So you mentioned some stats earlier, and I forgot to bring it up, but I wanted to talk about the Harris poll. Tell me about the poll and some of the major takeaways from that poll.
Yeah, so there's been a lot of over the years, a lot of conversation, certainly belief that shareholders are going to be your most loyal customers, but that was very anecdotal. Again, it makes sense that you would drive past Burger King to stop at McDonald's if you're a McDonald's shareholder, which, by the way, is one of the most widely held by individual investors, with over 2.5 million individual investors, shareholders of record. And so there was always this view on that was definitely the case. However, there was no research that really backed that up. There was some university data around purchase habits and that related to some of those types of things, but we really wanted to verify that this belief that we've had for decades around shareholders and being customers was true. And so we worked with the Harris Poll organization, which is one of the most renowned polling organizations, nationally representative, and did this survey. They've been around for 50 years and know how to get to the individuals. And so over 2,000 respondents to this poll, and a couple of the statistics are really impressive, but also validate our premise. 80% of individual investors agree that being a shareholder in a brand would make them more likely to be a customer of that company. 77% of individual investors would be more likely to buy a publicly traded company if they offered a perk or reward. These are some really phenomenal numbers. Even 82% of individual investors would be likely to buy shares of stock of a company if they're a brand they love. And so it actually creates preference. We had statistics around competitive analysis, and we were able to size the market. 130 million individual investors in the US, which is about double what any other statistic that has been published in the past. 52% of Americans own individual stocks, and that's, again, not including 401k, mutual funds, or retirement accounts. It's pretty consistent. Ownership is pretty consistent across ethnicities. Hispanic ownership of stocks at 57%, actually higher than white Americans at 52%, and Black Americans at 43%, but all significantly high numbers of share ownership. And you see that in what some call the Robin Hood effect. But this idea that with free trading, it made share ownership much more accessible to the masses. And so what you're seeing is people buying, again, the brands that they love. And so the ownership follows, the interest follows this brand affinity, and TiiCKER simply makes that connection between the consumer and shareholder ownership and the shareholders and the public companies.
So what would be interesting is, and this is just kind of a hypothesis, is whether or not it's a case of their consumers love the brand, so they buy the stock and then they're loyal, or is it the case of they own the stock because they like it, the fundamentals of the company, and then they start buying the brands? Any idea as which way that goes, or is it both?
That was exactly what we were trying to prove. Is are people that brand loyal? Are they that brand conscious that it would actually impact what they invest in? And the overwhelming answer, more than 75% of every angle that we went at this is, in fact, they would buy a public company that offered a perk more than they would buy a company that didn't offer a perk. So that says nothing about their financials, and they would, again, choose a brand that they love over another stock at a rate of 4 out of 5. That says nothing about the financials, but that's because individual investors, They buy stock as they shop, as they're brand loyal the rest of their life. They're brand familiar, and so they act in the stock market as we believed, and now can kind of prove that premise that they're looking at the long-term investment, and it's led us to coin a new metric called lifetime shareholder value. But the idea is that shareholders own a stock over a period of time. If you're a direct stock purchase owner, you average 8 years in a stock. So you own it for multiple years. During that time, how much do you spend with that company, with that brand? And so I think that's going to be a metric that for the first time we can help public companies identify, measure, and say we should be marketing to this high affinity, brand loyal, company loyal audience. And so I think that's really the reason we exist. And I'll add one more statistic, and I know I've inundated you, Alan, with a lot of stats here.
I'm a numbers guy, so bring it.
The one that jumped out at me, it's almost like you scratch your head and say, is that real? But online investing, just the asset value of online investors and big five brokerage firms, so Schwab, Ameritrade, E-Trade, Fidelity, and Robinhood, just in those 5 organizations, 10.6 trillion, that's trillion with a T, assets in just those 5, and that's as of September 30th, 2020. So this is very current. That's a huge asset size. It's one of the biggest industries. It dwarfs many other industries. And so as a pure market, as a pure demographic, this is a huge untapped potential for public companies. And so that's what really makes us excited. We set out on this journey with TiiCKER to try to connect to that individual investor, and didn't even know the size of it, couldn't prove their loyalty, and now we not only have a huge market, but they actually make decisions about what they own in their portfolio based on how they live their life, where they shop, or what they drive, where they go. These types of affinities translate into stock ownership.
Yeah, and as you probably know today, the market reached a new milestone. And that kind of leads me to my next question is, what is your favorite stock? Is it tied to a particular shareholder perk?
Yeah, it's my personal favorite right today would be XFC. And it's actually it's a new client of ours, but my kind of longtime favorite would be ADDYY, which is trades on the OTC, but it's a brand that everyone knows, and I've known since the 80s, Adidas. And Adidas, wearing Adidas, me and Run DMC back in the 80s. But it's a European-based company, but traded in the U.S. as many global companies are, and that's part of the not a lot of people even know that Adidas is a public company because it's European, and they think, oh, well, the brands that I might know would be a Nike or Under Armour, or a Wolverine Worldwide, which owns again Merrell and Sperry and other brands like that, or Timberland. But a lot of global companies are U.S. listed, and frankly, TiiCKER can help you connect with those companies regardless of if they're U.S. They can be in Canada or London Stock Exchange or Australia. That's, I think, the ultimate of TiiCKER is a global platform, and I think that's really exciting to think about. But yeah, so my passion is Adidas. I think my favorite perk is certainly the XFC, and I think that's going to be a fun one to watch.
Well, great. Look, I don't have any other questions right now, so I thank you for your time, and we're going to sign off of our very first inaugural podcast. Thanks a lot, Jeff. Thanks for joining.
Awesome. Appreciate you having me. Thanks, Al. We'll see you soon.
Bye-bye.